Take a look at these two trades. The trade on the left gave less than 3 risk to reward, while the trade on the right delivered more than 7 risk to reward. Now here is the interesting part. Both trades came from the same currency pair, on the same day, with the same market direction, the same targets, and even the same trading idea. So why did one trade produce more than twice the profits of the other? The answer has nothing to do with luck. It all comes down to one thing: your entry. In this video, I am going to show you how I use higher time frames together with lower time frames to find snapper entries, improve my risk to reward, and get much better results without changing my trading strategy. Before we get into the analysis, there is one important concept you need to understand first: supply and demand. Let us start with the supply zone. A supply zone is an area where the market pauses before making a strong bearish move. It tells us that sellers stepped into the market with enough strength to push price lower. Here is an example. Notice this strong bearish move. If we look just before it, we can see the last bullish candle before the drop. This candle becomes our supply zone. When price returns to this area in the future, we pay close attention because sellers may become active again. That is where we begin looking for selling opportunities. Now let us look at the demand zone. A demand zone is an area where the market pauses before making a strong bullish move. It tells us that buyers stepped into the market with enough strength to push price higher. Here is an example. Notice this strong bullish move. If we look just before it, we can see the last bearish candle before the rally. This candle becomes our demand zone. When price returns to this area again, we begin looking for buying opportunities. That is all you need to understand for now, because everything else in this lesson builds on these two concepts. Now, let us move to a ray chart. We are looking at USDCAD on the weekly time frame. The first thing that catches my attention is the strong bearish move. Right after that, the market gave us a market structure shift, or MSS. In simple terms, it tells us that the market has shifted from bullish pressure to bearish pressure. Now, I look back to find the last bullish candle before this strong bearish move. This candle right here becomes my weekly supply zone. But there is something else that makes this setup even more interesting. Notice how price pushed up, almost reached the zone, and then dropped without touching it. Many traders would ignore this move, but I do not. I see this as an inducement. Simply put, inducement is a liquidity trap. The markets attract traders in one direction before returning to take that liquidity and continue with its original plan. So at this point, we already have 3 important pieces of confirmation. We have a market structure shift, we have our weekly supply zone, and we have inducement acting as liquidity below that zone. Everything now suggests that price may return to remove that liquidity, mitigate our weekly supply zone, and continue moving lower. Now, you may be thinking, if everything lines up, why not place a sell order on the weekly charts? It sounds like a good idea, but there are 2 problems. The first problem is that we still need confirmation that sellers are actually defending this area. The second problem is time. Even if the trade works perfectly, this is the weekly time frame. You could be waiting for a long time before price finally reaches your targets. That is not how I trade. Instead, I use weekly time frame for one purpose: direction. It tells me where I want to trade. The actual entry comes later. So instead of selling immediately, let us move down to the 4 hours time frame. That is where we look for confirmation and see if we can improve our risk to reward before placing a single trade. Remember, the weekly time frame gave us the direction. The job of the 4 hours time frame is to tell us if sellers are actually stepping into the markets. Notice what happens as price reached our weekly supply zone. The market reacts exactly where we expected and begins to move lower. That is a good sign, but the first thing I want to see is a market structure shift, MSS. Right here, the market breaks structure and shifted from bullish pressure back to bearish pressure. That tells me sellers are beginning to take control again. Now, I look for the last bullish candle before this strong bearish move. This candle becomes my 4-hour supply zone. At this point, everything is coming together. The weekly supply zone gave us direction, the 4-hour market structure shift gave us confirmation, and the 4-hour supply zone gave us an area where we can begin planning our trade. So let us mark our entry, place our stop loss above the supply zone, and target the previous swing low. Now, take a look at the reward. It is less than 3 risk to reward. There is nothing wrong with this trade. It follows the plan, it has confirmation, and it could still be profitable. But remember, our goal is not just to find an entry. Our goal is to find a sniper entry that will increase our reward. So instead of settling for this trade, let us see if we can improve it. This is where many traders stop. I prefer to go one step further. Since the 4 hours time frame has already confirmed the trade, I now move down to 1 hour time frame. Not because I want to change the direction, not because I am looking for another setup, but because I want a more precise entry with a better risk to reward. As soon as we drop to the 1 hour charts, notice how much more details becomes visible. The larger 4 hours candle have now opened into smaller candles, giving us a much clearer picture of what is happening inside that zone. To make things easier to see, I will remove the previous drawings for a moment. Now we use exactly the same rule. I look for the last bullish candle before the strong bearish move. This candle becomes my new 1 hour supply zone. Notice how small and more precise this zone is compared to the one on the 4 hours charts. Now I place my sell limits on this refined zone. The target stays exactly the same. The previous swing low does not change. The market direction does not change. Even the trading idea does not change. The only thing that changes is the entry. And because the stop loss becomes much smaller, the risk to reward becomes much larger. That is the power of refinement. You are not changing the trade, you are simply improving where you enter it. Now let us see how the market goes. Notice what happened. Price pulled back to our refined 1 hour supply zone, expected it, and then started moving lower. That feed our sell order exactly where we wanted it. From there, the market continued dropping until it reached our targets at the previous swing low. This trade delivered a little over 6 risk to reward. Now compare that to the trade we had on the 4 hour time frame. That setup gave us less than 3 risk to reward. Same currency pair, same market direction, same targets. The only difference was the entry. That is why refinement matters. Now I want you to notice something even more interesting. Let us go back to the weekly time frame. Look closely, the market has barely moved. If we had placed a sell order directly from this weekly zone, we could have been waiting for a long time before seeing any meaningful progress. Instead, we use the weekly time frame for direction, then we move down to the 4 hours time frame for confirmation. Finally, we refine our entry on the 1 hour time frame. That gave us a much smaller stop loss, a much better risk to reward, and the sniper entry we were looking for. This is the approach I use in my trading. Each time frame has a different job. When every time frame does its job, everything becomes much clearer. Before we end this lesson, there is one mistake you need to avoid. Do not move to lower and lower time frames looking for a better entry. Many traders make that mistake. A smaller zone does not always mean a better trade. Sometimes the market reacts before reaching those tiny zones and you end up watching the trade move without you. Refine your entry, but do not over-refine it. If this lesson helped you understand how to find sniper entries using multiple time frames and improve your risk to reward, then make sure you subscribe to this channel and use the comment section if you have questions, or tell me the next video you want to see on this channel. Thank you for watching, and I'll see you in the next one.